Hey, everybody, we have to talk about what I think no one is talking about, and that is the market getting more stable or more unstable? Is the world moving back into the stock market and saying, okay, it's over, that was just something, let's get back in? Or is the world saying, nope, we're still moving our attention away from the market and into other asset classes, which means we have to look at those other asset classes. So we're going to do that today, and we're also going to look at some individual stocks, a couple that are really good setups. I want to show you some trades that are good trading setups. And I also want to talk about a part of the market that you do not want to see get weaker if you believe the market's bottoming. Stick around, we'll get to it. Hey everybody, RC Peck here. We have to talk about the S&P 500. We have to talk about the NASDAQ 100. We have to talk about Asian stock markets, European stock markets. And the question is this, there's this really interesting thing that happens when a market falls about 20%. And I'm recording this after the close of market on Friday. And one of those things happened today. The neat thing is it also happened to another index a while ago. So whether you're in the market or not in the market, over 60 or 30, really understanding these concepts are really going to help you bring more clarity and control around your money, because that's really the key, is to make sure you're getting more and more clarity and control. So let me pop over to the first chart we're going to look at. So let's do that here. So look at this right here. It's just the S&P 500 using the symbol SPY. Today, intraday in the market, the S&P was down a little over 20%, which is right where my bottom blue line is. Now the black line is the close of market. So the market went below that 20% today and buyers came in. So the 20% down, which I can show it differently, is kind of right there. So on the S&P 500, kind of the buyers came in and said, no, I'm gonna buy at this 20% down. So the 20% down mark was defended. And that's why it did not close down 20%, it being the S&P 500. But now let's look at the NASDAQ 100. So the NASDAQ 100 right there did the closing down 20%. And if you can see that, you saw that that was defended too, right? People came in and they bought. They saw the NASDAQ down 20% and they said, hey, I'm coming in because I know people defend 20%. Now, it doesn't matter why it's 20%. That's what the world has said, that we will defend a 20% down in a market. And so the S&P fell 20%. It did it in March, and then it went up. It actually rallied. Buyers kept coming in until it hit a point where there were no more buyers left. And today the NASDAQ 100 is down way more than 20%. So this 20% rule actually matters, which then means you kind of want to start going around. This is all world ex-US. So this is the whole world here. And you want to kind of see, like, was the 20% down protected or supported? And here, this is all world ex-US. And when this fell 20%, buyers came in. Okay, now also notice this, buyers came in right where COVID, the peak before COVID came in. So all world ex-US, you had the same thing come in, this 20% down, really supporting it. No, it does not mean the correction's over. It simply means buyers came in at that 20% down, because as you start to go around the market or around the world, you can start to see what happens in other parts of the world when this 20% happens. So this is Europe's stock market right here. And you can see there was a lot of volatility when it fell 20%. It was kind of protected. Clearly it fell below it and then zoomed higher and is now, let's get to the 20% here. It's still below it. So I believe what's happening is the S&P is catching up to the rest of the world. This is Europe right here. Here's emerging markets. So let's bring up emerging markets right here. This is really different because it did break out, but here's its 20% defend. And it went way below it. It went way below its pre-COVID peak. Got above it, right? Here's the 20% down mark right there. It got above it. See, it popped above it and more sellers came in. And so now emerging markets is way down below its 20%. And so these numbers that get defended are really important. And right now the S&P got defended today, meaning it went below, just below that 20% down, and buyers came in. These are signs of instability, right? So the S&P is behind the rest of the world about 2 months. About 2 months ago, the rest of the world got to this 20% down, attempted to defend it, and then eventually more sellers came in. So the question then is the rest of the world going to join the S&P and start moving higher, or is the S&P kind of late to the game? And as of right now, the S&P is late to the game. Now, part of the reason is here's the bond market in the US that has found some short-term disability. I was almost going to say disability, has found some short-term stability. But the bond market itself this year, kind of top to bottom, is down about 11%, which is really a huge number considering we are all taught that bonds go up when stocks go down. But that is not happening. And really the only place in town that is still showing its upside stability is commodities. Commodities have been going up for 2 years. They're still the place money is moving into. Okay. I told you I wanted to show you a part of the market that you do not want to see instability. So a place of the market that you do not want to see instability is staples, consumer staples. So consumer staples are a place where they're supposed to be safe. Now, look, they are kind of safe because they're only down 13%. They're only down 13%. So they're doing their job, but you can see they're getting more and more unstable. And here's what's interesting about consumer staples. Some of the strongest companies on the planet, companies that are not going away, companies that have nothing to do with crypto or buy now, pay later, or any new thing that had to do with COVID, they're getting hit right now. So here's Costco down 33%. That's also known as a third of its market cap got wiped out. Target, look at Target. Target absolutely has been taken out. Again, these are not startups. These are not companies that are going away. These are companies that have managed both the whole online thing, like the whole world's buying only stuff online. They're also getting hit. And what that tells us is the market is getting more and more unstable because they're just like, look, if it's not the most amazing quarter numbers ever, and even if it is, it's like, forget it. It's not good enough. And so the market's going through and punishing these companies. Here's Walmart right here, absolutely punishing these companies and hurting them in a big way. So this is not just a growth thing. And if you're into growth, then you're getting hurt. This is the strain of the market is working through, the strain of investors is working through the market to all parts of the market, including that part of the market that should never really go down that much, which is low volatility. And low volatility is starting to pick up volatility to the downside. It's kind of had a double top here. So the market is in an instability stage right now, and it is getting more unstable and not more stable. Now, as far as a fun little trade, here's Foot Locker right here. Now, I'm not saying you should buy this or shouldn't buy this, but as far as a trade goes, it's very interesting because it has come down right to here and just kind of stopped falling, right? It clearly stopped going up right around here. You can see the price couldn't get above that. And so here it is now just trying, like, we'll get above 32, we'll get above 32. It's very likely if it breaks and stays above 32, you can see a fast move up to 45. Now, I'm not telling you should trade. This is not a trading video, but when I see kind of interesting things, it's fun to point out. I'll just point out one more to you, and then I'll wrap this up. CTVA. So here's a company from a publicly traded company. It's fairly new. And I want to point something out to you here. Here, this company, it's specialty chemicals, which is a material, which is a commodity, which is doing well. Here you could see the price could not get above 31. And then once it finally did, notice it broke above and sat back down on that 31. You can see that, right? It broke above and came down to that 31. And then it moved higher until it couldn't go higher again, right? And it kind of had this price range here, first there and then there, where it couldn't get above. Clearly couldn't get above here. And then it moved higher again, but it just did one of those zooming back down to where more buyers came in. And this is on the bigger side, 43 billion in size, and it's in the right sector and subsector, which again, it's the materials is its main sector, and specialty chemicals is its subsector. So look, there are things that are working. There are places that are growing. Commodities are working. Absolutely. Dividend producing stocks are working, though not everyone. And the market is moving through and just bringing more instability into the market. So let's wrap this up. I believe the S&P is in the process of joining the rest of the world. I think right now, unless something majorly changes, we basically have somewhere between a 40 to 60% correction baked in. Maybe I would say 35% to 55%. Let me be more conservative there. And the reason is because a lot of these indexes on the planet, major indexes, are going down to their pre-COVID peak and also testing their COVID bottom. Those are two major points that they're going to test. And literally across the globe, that's where the price is going down to, pre-COVID high and then their COVID low. And that's where companies and indexes are finding buyers. And if that's true, that means we're looking at somewhere between a 35 to 55% correction, which again is not a 95% correction. And so that's what's going on. Now, what to do about it? Follow price charts, keep dry powder. Don't try to make a quick buck in times of instability, which we're in. I hope you like this video. If you like it, I think you'll love my other videos. Leave a comment. Let me know where you think I got it right, where you think I got it wrong. And if you are curious about how I manage people's money, you can just click the link in the description, which will give you some information about how I manage people's money. Thanks, guys, for being in my world. I appreciate you, and I look forward to speaking with you soon. Okay, take care.